Modern market volatility demands more than just charts, it needs strategic thinking. Every trader knows the rush, the thrill of a breakout, the pain of a sudden reversal, and the constant tug of war between fear and greed. But behind every candlestick and chart pattern lies something deeper: strategy. In today's markets, filled with algorithms, geopolitical uncertainty, and emotional traders, success is no longer about simply reading indicators. It's about reading yourself and the opponent. And who better to learn that from than Sun Tzu, the ancient Chinese general and philosopher who wrote The Art of War, a timeless manual on strategy, psychology, and discipline. Even though it was written over 500 years ago, The Art of War remains one of the most cited texts among successful leaders, athletes, and traders. Because the battlefield may have changed, but human nature, fear, greed, impulsiveness, and pride has not. So, what can Sun Tzu teach the modern trader? More than you might think. If you know the enemy and know yourself, you need not fear the result of 100 battles. In trading, your enemy isn't another trader, it's your own emotions. The market exposes weaknesses faster than any opponent. If you lack discipline, you'll overtrade. If you crave validation, you'll chase social media setups. If you can't control fear, you'll miss opportunities. Sun Tzu's first lesson is mastery of self-awareness. Before every trade, you should understand: what are your emotional triggers? What conditions make you break your rules? Are you reacting to the market, or are you anticipating it? A trader who loses 3 trades in a row may feel pressure to make it back. Sun Tzu would call this emotional warfare. The enemy has already won, because your strategy has been replaced by desperation. Winning traders approach the market with calm, measured thinking. They understand their psychology as deeply as their technicals. Because as Sun Tzu said, "He who is prudent and lies in wait for an enemy who is not, will be victorious." Victorious warriors win first and then go to war, while defeated warriors go to war first and then seek to win. A professional trader doesn't wake up and randomly click buy. Preparation happens before the market opens. The best traders have battle plans, pre-market analysis, key levels, potential scenarios, risk limits, and contingency plans. By the time they enter a trade, they already know where to enter, where to exit, how much to risk, and what invalidates the setup. In contrast, amateurs go to war without armor, reacting impulsively, trading from emotion rather than logic. Sun Tzu's principle reminds traders that preparation breeds confidence. Every great trade begins with clarity and discipline. Consider a trader who marks out supply and demand zones before the session. When price hits their level, they don't hesitate. The plan was made in calm conditions. That's victory before the battle even begins. In the midst of chaos, there is also opportunity. Markets are built on chaos, volatility, uncertainty, and emotional reactions. Most traders fear chaos, but Sun Tzu teaches that within it lies the seed of advantage. When everyone panics, prices move irrationally. For the calm and patient, this chaos becomes an opportunity. During sharp sell-offs or news-driven volatility, many traders freeze or exit in fear. But the disciplined trader sees potential reversals forming as emotions peak. Chaos is not a threat, it's a signal. Volatility rewards the prepared, punishes the emotional. All warfare is based on deception. While this might sound unethical in trading, Sun Tzu's idea of deception translates to strategy and patience. Markets often fake moves, false breakouts, liquidity traps, and manipulation. To succeed, a trader must learn to recognize these traps rather than react emotionally to them. A breakout that fails is not a loss, it's information. It tells you where retail traders were caught and where smart money might step in next. Sun Tzu would advise: don't show your hand too early. Don't jump into every move. Wait for confirmation. Be patient when others are impulsive. The trader who can appear inactive, while quietly waiting for high-probability setups, often wins the biggest battles. He will win who knows when to fight and when not to fight. One of the hardest lessons in trading is learning not to trade. New traders believe more trades mean more profit, but professionals know the opposite. Selectivity is power. Every battle you enter drains emotional and financial energy. Sun Tzu's wisdom teaches restraint. Pick your battles, wait for favorable conditions, and conserve your capital for when the odds are truly in your favor. A trader who sits out during choppy, uncertain sessions is not being lazy. They're being strategic. They're preserving their resources for clearer setups. They are waiting the enemy in a position of advantage. The greatest victory is that which requires no battle. In trading, this means mastering the ability to not engage when the setup isn't right. Sometimes, the best trade is no trade. This mindset separates impulsive traders from strategic ones. The ultimate trader doesn't feel compelled to be in the market every day. They wait for high-probability moments. Sun Tzu's principle is about conservation of energy. In trading, that's your capital and emotional resilience. A trader who avoids unnecessary losses wins more in the long run than one who chases constant action. True victory is sustainability, not just short-term gain. The skillful fighter puts himself beyond the possibility of defeat. Sun Tzu never promised victory in every battle, but he taught how to avoid destruction. In trading, this is risk management. You can't control the market, but you can control your risk. Before entering any position, a trader must ensure the loss is predefined and acceptable. Position size aligns with account size, and stop losses protect against emotional errors. This philosophy means your first goal isn't to win big. It's to not lose big, because survival ensures longevity and longevity ensures mastery. To secure ourselves against defeat lies in our own hands. That's exactly what proper risk management does. It shields you from ruin. Let your plans be dark and impenetrable as night, and when you move, fall like a thunderbolt. Trading is a solitary journey. The best traders don't broadcast every move or seek validation from others. Their strategies are private, their process internal. Sun Tzu valued secrecy because it preserved strategic advantage. The same applies in markets flooded with noise and opinions. Focus on your plan, not on what influencers or chatrooms are saying. When your plan aligns with the market, act decisively. A trader who quietly waits for a liquidity grab and executes flawlessly while others argue online exemplifies this principle. Strategy, patience, precision, all wrapped in quiet focus. The wise warrior avoids the battle. Trading is a mental war. The wise trader doesn't argue with the market, chase revenge trades, or cling to losing positions. They know when to walk away. Detachment is one of the highest forms of trading mastery. The ability to accept losses, skip trades, and remain emotionally neutral is what Sun Tzu meant by wisdom. When a setup fails, the amateur blames the market. The wise trader reviews, adjusts, and moves on. They don't fight battles already lost. In this way, Sun Tzu's ancient wisdom becomes a modern mindset. Trade what you see, not what you feel. If we translate the art of war into trading, the message is timeless: discipline beats emotion, preparation beats prediction, patience beats impulsiveness, and risk management beats luck. The market, like the battlefield, rewards those who remain calm under pressure and act with precision. Sun Tzu's wisdom wasn't written for traders, but it may as well have been. Every chart, every setup, every decision is a micro battle of strategy and psychology. And in this arena, victory doesn't go to the fastest or the loudest, it goes to the most strategic. The ancient and the modern meet in one truth: success is built on discipline, not emotion. Sun Tzu's lessons echo in every aspect of trading: the patience to wait, the courage to act, and the wisdom to know the difference. In the end, trading isn't just numbers on a screen, it's a test of the human spirit. And as Sun Tzu would remind us, the supreme art of war is to subdue the enemy without fighting. For the modern trader, that means mastering your mind, and in doing so, mastering the market. Know your enemy and know yourself, and you will not be imperiled in 100 battles. This timeless lesson from Sun Tzu's The Art of War lies at the very core of trading success. In markets where uncertainty rules, where billions are gained and lost in seconds, understanding the battleground is not a luxury, it is survival. The battlefield of modern trading is digital, complex, and psychologically intense. Here, the weapons are data, strategy, and discipline. The enemies are volatility, emotion, and ignorance. To win in this environment, traders must master two dimensions: market intelligence, knowing the external terrain, and self-awareness, mastering the internal battlefield. Because in the end, the market doesn't defeat you, your reaction to it does. Knowing your battleground begins with understanding the enemy, the market itself. The market is not a living being, yet it behaves like one: unpredictable, emotional, reactive. To trade effectively, one must study it the way a general studies his opponent, learn its patterns, sense its moods, and anticipate its movements. Market intelligence is not about guessing where price will go next, it's about understanding why it moves. This means analyzing trends, sentiment, and momentum, as well as recognizing the human psychology driving every candle on the chart. In essence, market intelligence is the art of decoding behavior. Each market phase, whether bullish, bearish, volatile, or stagnant, has its own rhythm and psychology. In a bull market, optimism fuels risk-taking, greed pushes traders to buy the top. In a bear market, fear dominates, traders sell too early or too late, driven by panic. In sideways conditions, impatience grows, traders force trades in dead zones, bleeding capital slowly. To know your enemy is to adapt your weapons to the terrain. The same strategy that thrives in a trending market may fail miserably in consolidation. Just as a general adjusts his tactics to terrain, desert, mountain, or forest, a trader must adjust to market conditions. The bull market is like open terrain, fast, aggressive, momentum-driven. The bear market is the ambush zone, traps and reversals everywhere. The sideways market is the fog, visibility is low, and false signals dominate. A disciplined trader studies these conditions through technical, sentiment, and volume. They recognize when liquidity is building, when momentum is fading, when volatility is compressing, and they act accordingly. The undisciplined trader, on the other hand, charges blindly into battle, unaware of the ground beneath his feet. Sun Tzu wrote, "If ignorant both of your enemy and yourself, you are certain to be in peril." In trading, this ignorance manifests as emotional trading, reacting to the market rather than anticipating it. To truly know the battleground, a trader must combine external intelligence, market awareness, with internal mastery, self-awareness. Because the most dangerous battlefield is not the chart, it's your own mind. Every trader carries an invisible opponent, their emotions: fear, greed, overconfidence, revenge. These are the unseen forces that destroy consistency. Understanding your own psychological biases is as vital as understanding the market's direction. Greed convinces you to chase moves. Fear convinces you to exit too early. Overconfidence makes you size up recklessly after a win. Self-doubt makes you hesitate and miss valid setups. These internal battles occur daily, and every loss is often a reflection of emotional imbalance, not analytical failure. Sun Tzu advised warriors to know yourself. In trading, this means understanding your temperament, whether you're impulsive, cautious, patient, or reactive, and building a system that protects you from your weaknesses. A trader prone to fear should automate entries and stops to prevent hesitation. A trader who gets greedy should define profit targets before entering a position. Emotional self-knowledge turns trading from chaos into controlled execution. Market awareness tells you what might happen. Self-awareness determines how you'll respond when it does. Together, they create strategic harmony. Let's consider the terrain of trading in detail. Bull markets, often driven by optimism and liquidity, create a psychological illusion of endless opportunity. Traders believe this time is different. They ignore risk management, chase momentum, and confuse luck with skill. When the inevitable pullback arrives, they're overexposed and underprepared. The wise trader, however, recognizes that every bull run carries hidden danger. Euphoria is the prelude to reversal. Thus, while others celebrate, the disciplined trader tightens stops, secures profits, and prepares for defense. Bear markets are the opposite. Fear dominates, confidence collapses, and liquidity dries up. Traders either panic sell near bottoms or freeze in indecision. Yet, this is the phase where real opportunities emerge for those with courage and clarity. Sun Tzu said, "In the midst of chaos, there is also opportunity." The disciplined trader, trained in patience and observation, identifies accumulation zones while the fearful retreat. They prepare their strategy not by reacting emotionally, but by aligning with larger cycles. Volatile markets, the true test of emotional resilience, are psychological minefields. Prices whip violently, stop hunting becomes common, and rational analysis gives way to confusion. Many traders lose not because their strategy fails, but because their emotions do. They switch systems mid-trade, revenge trade after losses, or chase every spike. The market's chaos amplifies inner chaos. Here, Sun Tzu's wisdom of calm and control becomes critical. He who is prudent and lies in wait for an enemy who is not, will be victorious. Volatility rewards patience, not aggression. It's a time to reduce size, wait for confirmation, and preserve capital until clarity returns. Sideways markets are perhaps the most deceptive. They lull traders into boredom and impatience. False breakouts bait entries and reversals punish them. In this terrain, discipline and awareness are the true edge. The skilled trader steps back, recognizing low probability conditions and conserving energy. They adapt, perhaps focusing on scalping small ranges or waiting for a breakout structure to form. As Sun Tzu taught, the wise warrior avoids the battle. In trading, this means staying out when the environment offers no edge. Knowing the terrain allows you to act strategically, but mastering yourself allows you to act consistently. The greatest traders treat emotional discipline as their primary weapon. Without it, knowledge and skill are meaningless. A trader can study for years, master technical analysis, understand fundamentals, and still fail, because their emotions hijack execution. The market is designed to exploit human weakness. It preys on impatience, pride, and fear of missing out. The key to survival lies in emotional detachment, the ability to follow your plan regardless of outcome. Every trade should be executed with military precision: plan, act, exit. No hesitation, no attachment. The emotional trader fights two wars, one with the market, one with himself. The disciplined trader fights none, he simply executes. Building this level of discipline requires structure and practice. It starts with journaling, recording trades, emotions, and patterns of behavior. Over time, patterns emerge. You see when you overtrade, when you ignore your plan, when you exit too early. Awareness leads to correction. Meditation, breathing techniques, or even stepping away from the screen can train your mind to detach from short-term noise. A clear mind sees clearly. Sun Tzu wrote, "In war, the way is to avoid what is strong and to strike at what is weak." In trading psychology, this means identifying your emotional weaknesses and structuring your strategy to avoid them. If you're impatient, trade longer timeframes. If you're impulsive, automate entries. If you're fearful, reduce position size. Strategy is not about eliminating emotion. It's about managing it. A resilient trading psychology is built on 3 pillars: discipline, patience, and adaptability. Discipline ensures you follow your system. Patience ensures you wait for high probability setups. Adaptability ensures you adjust to changing conditions. Together, they form your mental armor. But just as armor is heavy, discipline is uncomfortable. It demands self-control when greed tempts you, restraint when markets run wild, and courage when losses sting. This is the essence of mastery. Sun Tzu said, "He who is prudent and lies in wait for an enemy who is not, will be victorious." The disciplined trader is that prudent warrior, calm, strategic, and emotionally stable, striking only when the odds align. Market intelligence and self-awareness are not separate skills. They are 2 sides of the same coin. One without the other leads to imbalance. A trader who knows the market but not himself will crumble under pressure. A trader who knows himself but ignores the market will misread opportunity. True mastery comes when both are aligned, when analysis and psychology move as one. At that point, trading becomes art, a dance between logic and intuition, risk and reward, attack and defense. The market stops feeling like chaos and begins to feel like rhythm. The goal is no longer constant profit, but consistent performance. Sun Tzu's wisdom echoes through every aspect of modern trading. Knowledge without awareness is blindness. Awareness without action is weakness. The modern trader must be both philosopher and warrior, analytical yet patient, confident yet humble. In the heat of volatility, emotions will surge, trends will shift, and uncertainty will dominate. But those who know their battleground, who understand both market dynamics and personal psychology, will navigate the storm with clarity. Because the ultimate victory in trading is not beating the market, it's mastering yourself within it. When you reach that level of awareness, the charts become less about price and more about human behavior, your own and everyone else's. Every candle becomes a lesson in patience, every loss a lesson in humility, every win a lesson in discipline. That is the true essence of Sun Tzu's wisdom in modern markets. Knowing your enemy gives you insight, knowing yourself gives you control, but knowing both gives you freedom. Invincibility lies in defense. The possibility of victory lies in attack. These immortal words from Sun Tzu's The Art of War capture one of the most profound principles in both warfare and trading: the balance between protection and aggression, between patience and precision. Every trader, whether seasoned or new, stands on a battlefield of uncertainty, facing an enemy that can strike from any direction. Volatility, manipulation, emotion, or economic chaos. The market rewards those who move strategically, who plan like generals and execute like soldiers. Trading is not gambling, it is a campaign, and every position you take is a battle within a larger war. The goal is not to win every skirmish, but to preserve your capital long enough to win the war. To understand this, we must first grasp Sun Tzu's principle of defense. Invincibility lies in defense. In trading, this translates to capital preservation and risk management. Before a single trade is taken, before a button is clicked, the first and most sacred rule is simple: protect your capital. Your trading account is your army. Once destroyed, no strategy can save you. Every successful trader understands that surviving the market comes before conquering it. The best offense begins with a strong defense. Defense in trading means knowing your limits, how much you're willing to lose, how much you're risking per trade, and how to defend your account from emotional destruction. No battle is won by charging blindly. The trader who survives is the one who approaches each trade with measured risk, predetermined stop, losses, and the humility to accept when they're wrong. Sun Tzu wrote, "The general who loses a battle makes but few calculations beforehand." Likewise, the trader who enters without a plan is already halfway to defeat. Capital preservation is not about being fearful, it's about being strategic. It's understanding that your first job as a trader is not to make money. It's to avoid losing it recklessly. Think of your trading capital as soldiers in a campaign. Each dollar represents a unit of power. Would a wise general send his entire army into a single uncertain battle? Never. He divides his forces, positions them wisely, and ensures that even if one front is lost, the war can continue. In trading, this is risk management, never risking more than a small, fixed percentage of your account on any single trade. This structure ensures longevity. Survival allows learning, learning brings mastery. Many traders fail not because they lack skill, but because they lack defense. They risk too much, get emotionally attached to trades, and allow losses to spiral out of control. Sun Tzu's wisdom would call that a collapse of command discipline. Once defense is secure, the trader can focus on the second principle, offense. The possibility of victory lies in attack. In trading terms, offense is your entry, exit, and execution strategy, your battle plan. Every campaign requires timing, coordination, and purpose. Just as a general would never launch an attack without reconnaissance, a trader should never enter without analysis. This is where the plan takes shape, identifying setups, defining entry zones, setting profit targets, and establishing stop losses with military precision. The best traders are like tacticians, patient, data-driven, and unemotional. They wait for alignment between conditions and opportunity before striking. An effective offensive plan begins with clarity. What is your objective? Are you targeting a quick scalping opportunity or a swing setup that plays out over days? Each requires a different formation, a different level of commitment. For short-term trades, rapid entries and exits demand agility, the ability to move in and out of the market swiftly. For long-term trades, endurance and patience become your allies. Just as Sun Tzu adapted his army to terrain and weather, the trader must adapt his tactics to the type of market. A bull market invites boldness, a bear market demands caution, a sideways market calls for patience or avoidance. Precision in execution is what separates amateurs from professionals. The professional trader acts with exactness. Their entries are based on confluence, multiple confirmations aligning like troops moving in formation. Their stop losses are not guesses, they are strategically positioned in areas where, if breached, the battle is clearly lost. Their profit targets are not fantasies, they are grounded in logic, based on structure, volume, and probability. This approach transforms trading from impulsive speculation into strategic warfare. Every move has a purpose, every decision a rationale. Stop losses, often neglected by beginners, are the trader's shield. They are the defensive walls that protect from total ruin. Many view them as obstacles to profit, but they are in truth the embodiment of Sun Tzu's principle of defense. He who knows when he can fight and when he cannot will be victorious. A stop loss is that knowledge in action. It acknowledges that the battle is unwinnable and preserves the army for another day. Refusing to set one is pride, and pride has destroyed more traders than bad analysis ever has. On the other hand, profit targets are your strategic objectives. The towns or strongholds you aim to capture. They bring structure and purpose to the trade. Without them, traders often become lost in greed, holding too long, watching profits evaporate. Sun Tzu warned against this temptation. There is no instance of a country having benefited from prolonged warfare. In trading, prolonged warfare means overstaying positions, refusing to take profit, or overtrading. The disciplined trader knows when to advance and when to retreat. Once the objective is achieved, the battle ends. The army regroups, reassesses, and prepares for the next campaign. Yet even the most well-crafted plan can fail in the chaos of war. Markets, like battlefields, are unpredictable. News shocks, black swan events, sudden liquidity shifts. These are the ambushes and traps of modern trading. This is where Sun Tzu's third great principle becomes essential: adaptability. In the midst of chaos, there is also opportunity. The ability to adjust your strategy when conditions change unexpectedly defines the true professional. Plans are vital, but rigidity is fatal. A good general knows that no plan survives contact with the enemy. Similarly, no trading plan survives perfectly once the market opens. Flexibility is your lifeline. Adapting to change means remaining emotionally neutral when the market shifts. It means cutting losses quickly, resizing positions when volatility spikes, and knowing when to step aside entirely. The untrained trader resists reality. They fight the market, hoping it will bend to their will. The strategic trader, however, flows with it, adapting his plan in real time. Sun Tzu said, "Water shapes its course according to the nature of the ground over which it flows." The trader must be like water, flexible, formless, responsive. In trending markets, flow with momentum. In choppy markets, step back or reduce exposure. Adaptability turns chaos into rhythm. Sun Tzu's teachings on terrain also apply here. In trading, the terrain is the condition of the market, bull, bear, or neutral. The general who misreads his terrain sends his army into slaughter. The trader who misreads market structure sends his capital into ruin. Before every session, assess the terrain. Is the market trending or consolidating? Is volume high or low? Is sentiment extreme or balanced? These conditions determine not just your entries and exits, but your overall positioning. For instance, trading aggressively in uncertain or illiquid markets is equivalent to charging uphill into an ambush. You expend energy and lose ground. Strategic positioning means aligning with the path of least resistance. entering only when the terrain favors your move. When the unexpected occurs, a sudden reversal, an economic announcement, a liquidity trap, the average trader reacts emotionally. They panic, overtrade, or freeze. The strategic trader, however, already has contingency plans. Like a general preparing for multiple battle outcomes, they have thought through every scenario. If A happens, I will do this. If B happens, I will retreat. This mental preparation prevents emotional paralysis. Sun Tzu wrote, in war, the victorious strategist only seeks battle after the victory has been won. In trading, this means preparing for every possibility before entering a position. The battle plan is drawn in calmness, not in chaos. True mastery of trading comes from combining the principles of defense, offense, and adaptation into a single mindset. Defense preserves your longevity. Offense creates opportunity. Adaptability ensures survival under uncertainty. Together, they form the complete strategy of a trading general. Every trade becomes a calculated campaign: reconnaissance, market analysis, positionings, entry planning, engagement execution, and withdrawals, exit management. The key is balance. Too much defense leads to missed opportunities. Too much offense leads to recklessness. Sun Tzu taught that the skillful fighter puts himself beyond the possibility of defeat, then waits for an opportunity to defeat the enemy. For traders, that means protecting capital first, then seeking profit second. The psychology behind this is equally critical. Discipline is your command structure. Without it, no strategy endures. Every trader must cultivate emotional intelligence, the ability to act decisively under pressure and remain calm in uncertainty. Fear and greed are insubordinate soldiers. If left unchecked, they will overthrow the commander. Journaling, post-trade review, and self-reflection serve as your intelligence division, constantly gathering data on what worked and what failed. This feedback loop transforms experience into wisdom. Each mistake becomes a tactical lesson, refining your future plans. Strategic positioning also involves timing. Sun Tzu said, "Attack him where he is unprepared, appear where you are not expected." In trading, timing the market isn't about prediction. It's about preparation. It's about entering when liquidity and sentiment align, when your setup is supported by structure and confirmation. This patience is what separates calculated attack from emotional reaction. The trader who waits for the market to reveal its weakness before striking demonstrates strategic superiority. They don't force trades, they allow opportunities to come to them. Sun Tzu's greatest generals were those who achieved victory with minimal conflict. In trading, this is equivalent to executing clean, low-risk trades with high reward potential. The goal isn't constant engagement but efficient engagement. Every move should preserve your army's energy, your mental focus, and your capital. Overtrading is equivalent to overextending your army. Fatigue and confusion follow. The professional trader understands when to attack, when to rest, and when to observe. In the end, strategic positioning is not just about charts or entries. It's a mindset. It's the belief that trading, like war, is won through preparation, adaptability, and discipline, not emotion or luck. Sun Tzu's principles are as relevant in modern markets as they were on ancient battlefields: invincibility through defense, victory through strategy, and survival through adaptability. The modern trader must internalize these lessons to build plans like a commander, execute like a soldier, and think like a philosopher. Because in the marketplace, as in war, the enemy is not chaos, it's unpreparedness. The trader who approaches each session with a clear strategy, defined risk, and adaptable mindset becomes untouchable. They understand that losses are battles, not war. They protect their capital, learn from setbacks, and strike only when the odds are aligned. Sun Tzu said, "The supreme art of war is to subdue the enemy without fighting." In trading, that means creating a system so structured, so disciplined, that emotion and uncertainty lose their power. You win not by predicting the market, but by mastering yourself and positioning strategically for every possible outcome. That is how you plan your trades, like a campaign, not as random skirmishes, but as a deliberate march toward long-term victory. All warfare is based on deception. With this one line, Sun Tzu captures the essence of strategy that transcends centuries, a principle that applies as powerfully to modern trading as it once did to ancient battlefields. Deception in warfare was never merely about tricking the enemy, it was about understanding perception, shaping it, controlling it, and using it to gain advantage. In trading, the same truth holds. The market is a war of perception. It is a constant psychological battle between what appears to be true and what is true. The charts, news, and price movements we see are not always what they seem. Beneath the surface lies a game of misdirection, driven by emotions, manipulation, and the collective behavior of the crowd. The trader who learns to see beyond this illusion, who can recognize deception without becoming its victim, becomes not only profitable but powerful. In the modern market, deception doesn't come from armies or generals. It comes from signals, sentiment, and mass psychology. All warfare is based on deception. Means that victory belongs to those who can read between the lines, who can identify false breakouts, emotional overreactions, and misleading narratives designed to trap the unaware. The market constantly disguises its intentions. A sudden spike may appear bullish, but only serves to lure buyers before a reversal. A sharp dip might trigger panic selling before an upward surge. Institutions, market makers, and algorithms exploit this chaos, crafting the illusion of direction to manipulate liquidity. These are not coincidences, they are strategies. Just as Sun Tzu's generals feign retreat to draw out the enemy, smart money often creates traps to exploit herd behavior. To survive and thrive in such an environment, the trader must become a student of deception, not by learning how to deceive others, but by learning to identify when the market is deceiving them. This begins with detachment, the ability to observe without emotion. Most traders lose not because the market beats them, but because they are lured into predictable behavior patterns. They chase green candles out of greed and panic, sell red ones out of fear. They react rather than anticipate. The disciplined trader, however, reads deception like a general reads the battlefield. They ask, who benefits from this move? What's the intention behind this price action? Is this momentum genuine or manufactured? False signals are the market's most dangerous form of deception. Every chart pattern, every breakout, every reversal carries with it the possibility of illusion. But those who study market structure and volume flow begin to see through it. For instance, a breakout with weak volume is like an army charging without reinforcements. It may start strong but lacks staying power. Similarly, a reversal pattern without confirmation is a feint, a temporary maneuver to mislead. Understanding this dynamic transforms a trader from a reactionary participant into a strategic observer. Sun Tzu said, "Appear weak when you are strong, and strong when you are weak." The market does exactly that, and the trader who knows it can exploit this dance of illusion. But deception in trading isn't just external. The most dangerous deception of all lies within: self-deception. The trader's mind, if undisciplined, becomes the greatest enemy. Every overconfident entry, every revenge trade, every rationalization of a loss is an internal illusion, a false narrative we tell ourselves. Sun Tzu warned, "If you know the enemy and know yourself, you need not fear the result of 100 battles." Most traders know the charts but not themselves. They spend endless hours analyzing setups but little time analyzing their emotions. Self-deception manifests as denial, refusing to accept a stop-loss hit, moving risk levels impulsively, or believing that this time will be different. The master trader, however, develops radical honesty, the willingness to confront the truth of their performance without ego. They learn that the market exposes the mind. Every impulsive decision, every emotional trade, is a reflection of inner undiscipline. From this awareness comes patience, the trader's ultimate weapon. Striking when ready is Sun Tzu's principle of timing, and in trading, timing is everything. The difference between success and failure is often not knowledge but patience. Every strategy, no matter how powerful, fails if executed too early or too late. Sun Tzu advised his generals to wait for the right moment to strike, to exhaust the enemy first, observe the terrain, and only engage when conditions favor victory. The market works the same way. The undisciplined trader enters prematurely, chasing momentum without confirmation, hoping the market will bend to their will. The disciplined trader waits. They understand that not every candle is an opportunity and not every setup is a battle worth fighting. Patience in trading is not passive. It is strategic waiting. It is the discipline to observe price action, sentiment, and volume until all align in confluence. Like a sniper waiting for the perfect shot, the trader must master stillness. They must be comfortable doing nothing for long periods if the setup is not ideal. This is one of the hardest skills to master because it goes against human nature. The human mind craves action, especially in an environment as stimulating as the market. But Sun Tzu taught that the general who rushes into battle without advantage invites defeat. The market punishes impatience with precision. The professional trader knows that the best trades are not those made often, but those made right. Timing also involves understanding market rhythm, the psychological ebb and flow of fear and greed. Every market cycle, from bullish euphoria to bearish despair, follows a psychological pattern. When optimism is extreme, deception peaks. Retail traders become overly confident, convinced that prices can only rise. That's when smart money distributes, selling into strength while the crowd buys. When panic sets in and everyone is fearful, the same institutions accumulate, buying quietly while others capitulate. This is the essence of deception at scale, the manipulation of emotion through timing. To see through it, a trader must develop emotional detachment and contrarian awareness. Sun Tzu's concept of striking at the right moment aligns perfectly with this rhythm. Attack him where he is unprepared. Appear where you are not expected. The greatest opportunities arise not when everyone is acting, but when everyone is blinded by emotion. Psychological warfare then becomes both external and internal. Externally, the trader must understand the collective psychology of the market, the fear-driven sell-offs, the greed-fueled rallies, and the manipulative tactics used by larger players. Internally, they must confront their own mental weaknesses: fear, greed, overconfidence, and hesitation. Trading is not just a technical endeavor, it is psychological combat. The most successful traders are those who master their own minds. They don't react emotionally to losses or chase profits recklessly. Instead, they view each trade as part of a larger campaign, where discipline and emotional control are worth more than any indicator. To gain psychological advantage, the trader must understand the herd, and then rise above it. The herd follows emotion, the strategist follows logic. The herd buys tops and sells bottoms because it is driven by the need for certainty in an uncertain world. But the market rewards those who think differently. When everyone is euphoric, the disciplined trader becomes cautious. When fear dominates, they prepare to strike. This contrarian mindset is not about rebellion for its own sake, it's about recognizing the underlying emotional cycles that drive price action. Sun Tzu said, "He who is prudent and lies in wait for an enemy who is not, will be victorious." The herd is impulsive, the strategist is patient. The herd reacts, the strategist anticipates. However, psychological warfare in trading is not only about outsmarting others, it's also about outsmarting yourself. The human brain is wired for survival, not for trading. It reacts to losses as it would to physical danger, triggering fight or flight responses that lead to impulsive actions. A red candle feels like a threat, a green candle feels like safety. But in markets, this instinct is inverted. Safety often hides in fear and danger hides in greed. The disciplined trader learns to reprogram this response. They train their mind to act rationally in the face of emotional chaos. This is the inner war every trader must fight, the war against themselves. To manage this, traders employ routines and systems, structures that prevent emotion from dictating decisions. Pre-market planning, journaling, and review are the trader's version of Sun Tzu's reconnaissance. Before every trading session, the strategist assesses the battlefield. What's the prevailing sentiment? Where is liquidity positioned? What events could trigger volatility? By preparing mentally, they reduce uncertainty. When uncertainty decreases, fear diminishes, and confidence rooted in preparation replaces emotional impulsiveness. Another key to psychological advantage is depersonalization. The trader must separate their identity from their results. Losses are not personal failures, they are data. Wins are not proof of superiority, they are outcomes of probability. Sun Tzu taught that emotions cloud judgment. If your opponent is of choleric temper, seek to irritate him. The market, too, constantly seeks to irritate you, to provoke emotional reactions that lead to bad decisions. It will test your patience, tempt your greed, and exploit your fear. The disciplined trader refuses to take the bait. They remain composed under pressure, acting from principles, not impulses. This detachment allows traders to recognize deception in real time. When the crowd panics, they see opportunity. When the crowd becomes greedy, they see danger. This ability to interpret emotional extremes becomes a competitive edge. Just as a commander uses the enemy's emotion against them, the trader uses the market's sentiment to predict reversals and traps. Market manipulation, whether through fake news, algorithmic spikes, or social media hype, relies on emotional responses. The trader who can observe without reacting transforms chaos into clarity. Sun Tzu also emphasized the importance of fluidity. Be formless, shapeless, like water. This is perhaps the most overlooked aspect of trading psychology. Rigidity is death in markets. The trader who insists on a single approach, who refuses to adapt, becomes predictable, and predictability is easily exploited. Flexibility allows survival. A trader may shift from aggressive offense to conservative defense depending on volatility, sentiment, or performance feedback. This adaptability mirrors the great generals who adjusted tactics mid-battle based on new information. Deception and opportunity are two sides of the same coin. Every deceptive move in the market hides an opportunity for those who can see beyond it. A false breakout becomes a setup for a reversal trade. A panic-driven crash becomes a discounted entry. A euphoric rally becomes a warning to prepare for correction. The market is not against you, it is merely indifferent. It presents illusions to test your discipline. Sun Tzu's wisdom reminds us that the strategist wins not by fighting harder, but by seeing clearer. Ultimately, the art of timing and psychological advantage is about mastering perception. The The trader's goal is not to predict the future, but to read the present more accurately than others. They must sense when fear is excessive, when greed is unsustainable, and when equilibrium is about to shift. This awareness comes not from guessing, but from observation, from studying volume, sentiment, and behavior patterns with detached focus. When the market deceives others, the strategist sees truth. When others hesitate, the strategist acts. When others act impulsively, the strategist waits. In the end, trading mastery is not about control over the market. It's about control over the mind. Sun Tzu's lessons on deception and timing are not ancient relics. They are living principles of survival and success in today's markets. He wins his battles by making no mistakes. To make no mistakes means to stay disciplined, patient, and adaptable. To wait for the right moment, see through illusion, and act with precision. The modern trader, armed with Sun Tzu's wisdom, becomes more than just a participant. They become a strategist. They understand that every chart tells a story of fear and greed, every price movement hides intention, and every illusion hides opportunity. By learning to identify deception, master patience, and harness psychological awareness, they elevate themselves above the chaos. Because in the market, as in war, victory doesn't belong to the fastest or the strongest, but to the calmest, most prepared, and most perceptive warrior on the field. Victory comes from knowing when to fight and when not to fight. This single principle from the art of war encapsulates the essence of mastery in trading. The wisdom to recognize that success is not measured by how often you trade, but by when you choose to engage. In markets, just as in warfare, restraint is not weakness, it is power under control.